Our industry, in our profession, one of the biggest challenges is that it's a whole game of uncertain outcomes because we are dealing with capital markets and because we've taken upon ourselves the responsibility or onus of directing other people's capital into the capital market. And largely, at least in my case, it has always been equity oriented. So from that perspective, what happens is you're dealing in uncertain outcomes. And every once in a while, markets go for a tailspin. And generally, if you listen to people who are stock market guys, they will say that there are certain stocks or certain sectors which are cyclical in nature. I have learned the most cyclical thing is trust.
Hello everyone, I'm Pankaj from Larison Wealth Planners Private Limited. The book If God Was Your Financial Planner, written by our Managing Director Mr. Suresh Sadagopan, was launched on 24th August this year. So around this launch, Mr. Suresh had the opportunity of talking with the CEO of WhiteOak Capital, Mr. Aashish Somaiyaa. This bigwig from an MF house spoke to us about the WhiteOaks vision, equity and international investing, passive and actively managed funds, and investor education initiatives by WhiteOak Capital. Listening to this equity master talk about the capital market was an unparalleled learning opportunity. So brace yourself for this incredible journey into financial wisdom.
Thank you very much for agreeing to do this session with me. Today is a very nice day. Today we are launching the second edition of my book, If God Was Your Financial Planner. And this is with Westland Books. I just wanted to have a broad chat, complete chat with you on things to do with mutual fund industry, about your company's positioning, what you're planning to do, and things like that. This is for the benefit of the viewers and other people from the industry. So let me start out. You've been into the MF industry for long, and for a very long time, like more than a decade, you've been a CEO. What are the high points? What
Mhm.
are the challenges of being, at the top brass in a MF house? You've been there, done that. So wanted to hear from the horse's mouth.
So first of all, thanks for inviting me, and many many congratulations
Thank you.
on launching the book. And I'm sure that it's being kind of looked forward to in the fraternity in the industry, and of course by investors. So I wish you all the best, and I hope that it meets every success and very wide recognition.
Thank
And
you.
thanks for all your efforts in educating investors, advisors, mutual fund distributors alike. So
Yeah.
thanks for that, and wish you all the best.
Thank you so much.
Now, what you mentioned about our industry and the job profile over the decade, etc. Like you may have noticed, and like you may have had interactions with multiple other professionals. Generally, what happens is that as you go further and further in your career, I think the competencies and the skill sets associated with managing a business, with technical competencies, related to equity, stock markets, economics, I think all of these, become second nature, or they become, in Daniel Kahneman's terminology, it becomes system one response. So everything that you have learned in terms of your technical competencies and all, that becomes second nature to you. But I think what comes more difficult, or what becomes more and more challenging as you go along, is the softer aspects of managing a business, managing teams, managing market scenarios. To elaborate more, for example, in our profession, it's not like a profession of an architect or an interior designer. It's not like a profession of a chartered accountant or a physician, a physics teacher or a chemistry teacher or that something like that. Because in all of these examples I gave you, there is a high probability that there'll be some definitive outcomes in terms of what is being done. In our industry, in our profession, one of the biggest challenges is that it's a whole game of uncertain outcomes because we are dealing with capital markets and because we've taken upon ourselves the responsibility or onus of directing other people's capital into the capital market. And largely, at least in my case, it has always been equity oriented. So from that perspective, what happens is you're dealing in uncertain outcomes. And every once in a while, markets go for a tailspin. And generally, if you listen to people who are stock market guys, they will say that there are certain stocks or certain sectors which are cyclical in nature. I have learned the most cyclical thing is trust. Because when markets are doing well, where NAVs are going up, everybody trusts everybody. But when markets do badly or NAVs are not doing too much, then the trust actually becomes, calls into question. So I think maintaining people's trust, communicating with them effectively, I think these are challenges. For example, 3 years back, there was March 2020 and the index fell 30-40%. I don't think I lost any sleep over my or my family's financial future, but definitely hand-holding investors, addressing their queries amidst, reasonable amount of darkness or cloudiness in terms of the horizon. I think those are the things which, one enjoys also, but those are the things which are also the most challenging parts of, dealing in uncertain outcomes. So I think these are, and frankly, human beings want clarity, like, whereas capital markets are not always amenable to clarity. If you're someone who can deal with uncertainty, if you're someone who can live with lack of clarity, like I've said before, if you're someone who can thrive in a little bit of gray, then capital market is a great place. But by and large, human beings want certainty and they want clarity, and capital markets are not always amenable to certainty and clarity. So I think these softer aspects, behavioral aspects, are the most challenging ones when it comes to our profession.
Okay, wonderful. So in your, as far as WhiteOak is concerned, you have been a long-standing player in the industry. But as regards to the MF industry, you are a comparative new entrant. So this is a slightly crowded space out here. So how do you differentiate yourself? What will be your focus? How would you communicate that to the world at large? You are doing it already, but I want to hear that from you.
Sure. So, I think one of the remarkable things is that every time a new mutual fund or asset management company comes in, your clients and our entire ecosystem, they're already familiar with the name, because by and large, asset management companies in India are part of some industrial conglomerate or some financial conglomerate. They are already, asset management company comes, but before that, there is an insurance company or a bank or a broker or a fintech nowadays or some industrial conglomerate. They are part of that group. So when XYZ mutual fund comes, you already know XYZ bank, XYZ home finance, XYZ industries. You already know all of that. And hence the mutual fund, by the time it comes, you're already familiar with it. In case of WhiteOak, that is the positive and the negative. You don't know the name of WhiteOak as much because it's a pure fund management company. There's no bank or broker or insurance company behind WhiteOak. And lesser known fact is that if you look at India as a single country, WhiteOak is actually one of the largest foreign portfolio investors investing into India on behalf of global investors. So it's a pure fund management company. There's no bank, broker, insurance behind it. It's actually, as we go along, you will see more and more examples, I'm sure. But when WhiteOak got the license, it was probably the first time when a professional fund manager got a license. That's why I mentioned that we don't have any conglomerate behind us. So our founder, that is Prashant Khenka, he founded WhiteOak in June 2017. And prior to that, for 17 years, he was with Goldman Sachs. He was CIO for Goldman Sachs Asset Management. So what I mean to say is that it's a fund management company started by a professional and run by professionals. So pure fund management company, mainly into equities, one of the largest FPI into India. We manage Indian equity, and apart from that, of late, we've also been managing global equity as well as global emerging markets. So, and it's the largest research team in India. So we cover 650 plus companies, and we have 40 people in the fund management and research team. And we run, portfolios which run across sectors and across market caps. So we have very, very deep on-ground research coverage based on which, totally we manage $7 billion of Indian equity. Almost 5.6, 5.7 billion is global money invested into India, and between 2 to 2.2 billion is domestic investors' money invested into Indian markets. So I think these are some things which are different about us. And as we go along, you will see that differentiation will come from execution and also from innovation or launching products which are otherwise not available in the market.
So, I know about the fact that you are you are a major fan of equity investing. And
Mhm.
White Oak also seems to have equity investment focus. Of course, Mr. Prashant Kemka has, a lot of experience as far as international investing is concerned. But even when it comes to India, you have told me about $7 billion plus, which is there in
Yeah,
India. And out of that, 5.7 billion dollars from FPIs. So that's,
yes,
that seems to be like a huge equity focus as of now. So will that change
absolutely.
going forward, or will it remain an equity focused mutual fund company in the future?
So, I'll tell you our long range ambition actually, as a fund house, our long range ambition is
Yeah.
to be, let me give you an example. If you see pharmaceuticals, auto ancillaries, IT services, there are many sectors where there are Indian MNCs. Fund management, asset management is one space where there are no AMCs, which are MNCs emanating out of India. So our long-range ambition for WhiteOak is to be an Indian multinational company in the asset management
Oh,
space. And that's why, if you see, we are managing Indian equity, and beyond that, we've also started managing global equity and global emerging markets.
oh,
So over the number of years, you will find that we develop competency and capability to invest in equity all over the world. That is one. Second is, if you see in India, for instance, when you manage equity, in India, a sizable portion of equity is actually invested through equity hybrids, like, dynamic asset allocation or multi-asset allocation. So we do have competency and capability for that. We have developed that over the last couple
okay.
of years. So we do manage equity, we manage hybrid. And as we go along, you will find that we'll invest in and we will have more and more competency for other asset classes like fixed income, private equity, real estate. So our long range ambition is to be a full service asset management company, not only a full service asset management company in India, but also an Indian MNC, which will manage money in multiple geographies.
Yeah. You always espouse active investing. I've heard you so many times. Apart from equity, it is active investing which you clearly talk about. I want to hear from you again on that. The
Mhm.
data, the SPIVA data shows, at least in the large cap
Yes.
space, shows that many of the funds, many of the schemes are not able to really outperform the corresponding index. So,
Yes.
I want your views on this. So I am sure
Sure.
you have a different view on this. So you can tell,
Sure.
tell
Sure.
us about that.
Yeah. No. See, my sense is that, clearly last 2 to 3 years, especially 1920 onwards till about 2021, mid and briefly in 2022, but mainly from say 1819 till about 2020, 2021. For that span of 2 to 3 years, not only large cap funds, I think there was a broader difficulty for active funds to outperform the market. So before I dive into large cap funds, I just want to make a couple of points on that. See, what happens is that when people look at alpha or performance data, they start looking at last 1 year, last year, last 5 years. Now there, what happens is numbers are numbers. All said and done, what will happen is in between, if there are a couple of bad years, then they will wipe out the alpha of the previous 3, 4, 5 years. Such is the nature of CAGR linked. When you do compounded annual growth rate, that is how it works. So my first thing is that whenever you look at whether a fund generated alpha or not, or whether any sizable proportion of funds generated alpha or not, the correct way, according to me, is to look at discrete periods. So you look at calendar years, financial years, you look at quarterly returns, and then see that for different time frames or over any different discrete data sets, how many funds outperformed or failed to outperform. But what happens is most of these reports, when they say last 1 year, last 3 year, last 5 years. So I'll come to why 2019 to 2020, 21 was a bad phase for active management. But I just want to leave that thought that if in between, for reasons which I will now come to, if in between there are 2, 3 bad years, it will drag down your alpha of the previous, periods of 2, 3, 4, 5 years when you look at CAGR. Instead of CAGR, if you look at discrete periods, you might get a different impression from the data. That is one thing to keep in mind. Now, coming to this thing, I put the caveat in place. Coming to this thing about why I said that 2018 to 2020-21 was difficult for active managers. See, it's like this. If you see what do active managers do, through variety of recipes or modus operandi, ultimately they are trying to figure out companies which will grow earnings, grow cash flows at a pace faster than the broader markets or the indices. But look at it fundamentally, that when economic performance becomes very narrow. See, from 2019 onwards, India's GDP growth started slipping very, very badly. From a long period average of 6%, in 2018-19, it went below 5 or close to 5. 2019-20, it was 3.7%. 2020-21, we had negative GDP growth. And 2021-22 is when we regained our previous pre-COVID scenario. So conceptually, think of it this way, that when economic performance becomes very narrow, it's obvious that corporate performance will become very, very narrow. And index performance also becomes very narrow. So much so that in 2019, a phrase was coined called RIPIC, which basically said that HDFC, Reliance, ICICI, Tata Motors, Kotak Bank, Infosys, these were the 5, 6, 7 stocks which only worked, and rest of the market delivered no returns. So much so that in 2018-19, if you take those 2 calendar years, even I have not even reached COVID, if you just take 2018-19, you will find that 80% of all small cap stocks gave negative return, 60% of all mid cap stocks gave negative return, half of all large cap stocks gave negative return, and yet the Nifty was 5% up if you sum up those 2 calendar years. So basic point is that there was this patch around 2018, 19, 20 when economic performance, corporate performance was absolutely lackluster and index performance became very, very narrow. So if you have like 15-20 lakh crores of corpus invested already, you can't shift all that corpus into a bunch of narrow components of the benchmark. You will be invested where you will be invested. And for some time, you would suffer underperformance. So I think there is a reason why momentarily funds underperform for those couple of years. And now if you see, a lot of funds have bounced back and started outperforming. On your specific point of large cap, frankly, I agree with you, because in large cap, the entire investment has been directed saying that top 100 stocks have to be 80% of the portfolio. And that 100 stocks definition is quite narrow. And of course, in large caps, there is more, wide institutional coverage, right? So alpha opportunity also tends to be low. The other reason why in large caps alpha opportunity tends to be low is because in large cap you have a lot of commodity metal cyclicals. So just take an example. If you take Tata Steel, JSW Steel, and Steel Authority of India, typically commodities, metals, oil, HP, BP, IOC, they will always move in tandem. There is no alpha opportunity in one oil company vis-a-vis another oil company. There's no alpha opportunity in one steel company vis-a-vis another steel company. And there's no alpha opportunity in the power space, for example. If all power companies are doing well, all will do well. So the point is that large cap, anyway, the alpha opportunity is low. Plus we have a restrictive definition. Plus we have huge institutional coverage. So I buy the point that generating alpha in large cap is difficult. But if you ask me the broader set like flexi cap, multi cap, mid cap, small cap, there is significant alpha potential. I'll just leave you with one thought, that if you're looking at India's market, don't worry about index covering the market before market covers the economy. We are still in a phase where guys making shoes and pizzas are still getting listed. Our economy is not yet reflected in the market for us to start thinking that the index is going to capture the entire economy.
So good. I mean, I have some nice bite from you just now. Previous bite which I have heard from you is the Nifty will be the Sensex. So, I mean, you had said long time back.
Yeah, that is thankfully
come to pass.
Playing out now.
Yeah, which is actually playing out now. Yeah. Moving on. See, I mean, you people have so much international experience, international investing experience. How come there is not a single fund at this point in time? I mean, that international fund presence is not there of WhiteOak as of now. When will that?
So that's No. So, in fact, within WhiteOak Group, we have an asset management company in Singapore. And like I mentioned earlier, that asset management company of ours, we do manage global emerging markets. We do manage global equity. In fact, we are the only fund house globally which has, because a lot of our a lot of our ecosystem is Indian. We are the only asset management company in the world which probably has a global emerging market fund ex-India. See, because as Indians, a lot of our money, or probably bulk of our money, is invested in India. If you put money in a global emerging markets fund, again, it will put 20% of your money in India. That's not good for an Indian investor. So in fact, with Indian investors in mind, we not only created global emerging markets, we even created global emerging markets ex-India. And we also have a global equity fund. And a year or year and a half back, we actually filed with the regulator to put a feeder into our global emerging markets fund. But as you are aware, currently the Reserve Bank of India has not given additional limits for Indian mutual funds to put money abroad. So of course we'll await for the regulatory clarity, but we are ready to go actually. We have offerings in place, and at the earliest possible opportunity, we will launch those feeder funds. Till then, of course, anybody wants to invest, they have to figure out a way through LRS, for the investment to be done. But yes, very shortly when the regulation changes, we will have a feeder in place.
Great, good to know that. Yeah, the other thing is, MF industry has grown significantly over the past 15 years or so. But at the same time, the ownership of MFs in India is still lagging behind the West. Significantly. So, while a lot of education and other initiatives are, taken up, mutual fund Sahi Hai being one of the good initiatives. So, what is, anything specific that WhiteOak you are doing from the investor education point of view?
See, honestly speaking, because we are a new entrant, our top priority at this point has been more to make, the distribution fraternity, mutual fund advisors, IFAs, and RIAs just familiarized with WhiteOak as a brand or as a company.
Understood.
So that is what we have been doing till now. Apart from that, as we go along, if you really ask me, as we go along, in our industry, according to me, the most important education as well as marketing tool is content. So we're investing very heavily in 2 or 3 areas of content. One is equity strategy, second is product strategy, and third is training and learning and development. So right now we are putting all the building blocks in place. We are creating a very, very significant content strategy. And as we go along, you will see more efforts on that. So that is our plan. But I think that as we go along, we will be investing more and more in this area.
Yeah. So the other related point is, the current team of distributors, wealth managers, advisors, and all that. You still think it is at a level which can actually truly properly cover the Indian population, or is that the stumbling block in terms of actually penetrating mutual funds in the last mile?
No, I think you're absolutely right in alluding to this, because last mile coverage is a big, severe issue. And forget, we talk a lot about tier 2, tier 3. I'll give you a practical anecdote. I live in Mumbai. In my own society, there's 500 houses in the society, and you can imagine such a huge infrastructure. The security guards of my society, they contacted me, for example, 4 or 5 young guys, they're security guards. They consume knowledge. They know that they want to invest for their future. They've reached a stage where they've gleaned and understood that mutual fund and SIP is the right way to do. They don't know whom to reach out to. They figured out something on YouTube. They found me on YouTube. Then they came to know I live in the society. They rang my doorbell 11 a.m. on a Sunday morning, and 6 of them sat and asked me, and you will not believe it, they asked me pointed question, okay? How to do SIP. It's not like, sir, you are giving, you are imparting gyan to so many people, so why don't you impart some gyan to us? No. They knew exactly when they rang the doorbell and came to meet me, they knew what to ask. So what I'm saying is that, you are right. There are very many people who are looking to invest. The last mile connect is a serious problem. So, all these people are gleaning information from digital channels and from social media. But, it's half information, and last mile is a big problem. And I don't think everything can be addressed digitally, even if you consume a lot of information digitally, still you need to confirm even your beliefs. And you need someone to tell you where to sign the dotted line. It's not easy.
Correct. So financial literacy is a problem, education is a problem in spite of so much information being available. Even I have written that book, If God Was Your Financial Planner, as in a story format.
Of course.
So, I mean,
Of course.
so what do we do now going forward? What do we do? So there is so much of information out there. There are people who are consuming that information and they are doing something to rectify that. So, I mean, how do we actually break this knowledge barrier and how do we help more and more people to come into the system? I know that the number of people out there, number of advisors and MFDs out there, that has to also increase significantly. Is there anything else on your mind which can change this?
See, I don't think that number of advisors and number of distributors, we can overnight, scale it, or overnight we can change it. I'm not sure if that can be worked out. But I think what we need is a very, very wide prevalence of things like, helplines or digital advisory, or, like you've written a book, and I'm sure just like somebody looks up on YouTube, similarly, I'm quite sure that hundreds and thousands and hopefully millions of people will read the book and they will get some clarity and will inspire them to do something. But when they get inspired to take charge of their personal financial planning, then how to execute, how to actualize, like where do I go next? I think there we can't suddenly create such a huge manpower and last mile connect overnight. So what we will need is some kind of digital solutions which are not just giving content, but giving the real last mile how to, what to, and okay, sign here, do this, click this button. So I think we need some kind of remote channels, but which are more, personally connected, more execution oriented. See, today, for example, if I want to do a meeting, I don't need to go in person, right? We can interact on Zoom. So even if it is Zoom interaction and we can, or Teams or Zoom or Google Chat or whatever, even if it is that interaction and we can help people actualize investment by holding their hand, if not literally, but digitally or virtually, I think somebody needs to think of that actually, if you ask me. Your book is definitely going to inspire a lot of people to, take charge. And then the execution is what I think everybody has to think about.
Yeah. So one takeaway from here, probably WhiteOak is, thinking of doing that, is a kind of a overarching digital platform which will help in the last mile connectivity in the absence of sufficient number of feet on the ground. Correct?
Absolutely.
So
Absolutely.
can we expect something
Absolutely.
like that from WhiteOak and probably an industry-wide initiative which can actually change that for the better?
Yeah, I mean, so obviously as a manufacturer, we are not into distribution or wealth management or sales. But yes, this is something I do often think about, that what is the least friction and most easy approachability for people to execute. And, at some point in time, I would really think about implementing it.
Wonderful, Ashish. Thank you so much for weighing in on so many different things that I had thrown upon to you for answers. So thank you so much. It was a
Thank you.
useful discussion. I'm hopeful that your viewers, you had empowered those security guards. So I'm hopeful that many more thousands and thousands of people across the country are empowered by this conversation of yours with me. Thank you so much.
Thank you. Thank you. I wish you all the best. Thank you for having me.
Thank you. Thank you so much.